All right, strap in, everyone. Let's take a deep dive into Cloudflare's Q3 2024 earnings call. We'll unpack their performance this quarter and what it all means for their future.
These calls are always super interesting. We really get a peek behind the curtain at how these companies operate.
Exactly. So, first impressions. What do you think of those headline numbers? A cool $430.1 million in revenue for Q3, up a solid 28% from last year.
Yeah, 28% growth sounds amazing on the surface, right? But remember, they're aiming for that huge $5 billion revenue goal. And with the economy being what it is, well, makes you wonder if they're actually on track. Especially when you see their dollar-based net retention rate drop to 110%, down 2 whole points from last quarter.
Hang on, back up for a sec. For the non-finance folks like me, break down what that dollar-based net retention thing actually tells us.
Sure, it basically measures how much more or less existing customers are spending with Cloudflare compared to the same time last year. It tells us if they're sticking around and opening their wallets. And in this case, 110% means there's growth, but not as much as they've seen in the past.
Makes sense. And they did mention that dip is partly because of those pool of funds deals, that thing where customers pay up front for a bunch of services. Sounds like a risky move.
You hit it right on the head. It's a double-edged sword, really. Cloudflare's CFO, Thomas Seifert, even said, and I quote, "While these deals can have a short-term impact, they ultimately lead to customer expansion and increased revenue in the long run." Basically, they're trying to lock in customers for the long haul, but it comes at the cost of that initial dip in revenue. And that could spook some investors.
It's a gamble for sure. Let's see if it pays off. Now, what about all those big customer wins they were talking about? Added like a record 219 new large customers, bringing their total to over 3,265.
Yeah, 28% year-over-year increase for large customers, with those paying over $100,000 a year. Looks like they're reeling in some big fish, good for long-term stability, but analysts were quick to point out Cloudflare kind of brushed over those bigger deals that slipped past this quarter.
Trying to hide something, maybe.
Not necessarily. Their CEO, Matthew Prince, did own up to those delays, blamed it on the ongoing transition in their sales organization. New leadership, different ways to measure performance, and more focus on those huge enterprise deals.
So basically, trust us, we're working on it.
Pretty much. It makes sense, but you can't help but wonder about their execution, right? Will those deals actually close next quarter? Who knows?
Definitely raises some questions. What were the analysts grilling them about? Anyone throw some tough questions their way?
Oh, yeah. One analyst went straight for the jugular, asked about those slip deals, pointed out how Cloudflare mentioned them, especially in the US, wanted to know if this was just a blip or something more serious.
Bet that got Prince a little nervous. How do you respond? Any admission of sales struggles?
He was surprisingly cool and collected, said there were some delays, yeah, but blamed it on, you guessed it, the ongoing transition in their sales organization. Basically a big restructuring, short-term chaos.
Big changes indeed. Did those analysts buy it? Or were they skeptical?
There was definitely some side-eye going on, a lot of we'll see vibes. They're definitely keeping a close eye on those next few quarters, to see if those changes actually boost sales. One even asked if that Q4 guidance of around 25% growth was the lowest point, or if we might see things slow down even more.
Good question. What'd they say? Any predictions?
Seifert, the CFO, didn't want to give a hard prediction, but he did say something interesting. He emphasized how revenue is a lagging indicator in their subscription-based model. They're laser-focused on those leading indicators. Stuff like sales capacity and productivity. Thinks those have hit rock bottom and are about to bounce back. He even pointed to strong revenue growth in places like Asia and Europe, where their sales transformations have already taken hold.
Okay, so it's a waiting game. But they seem confident about that future growth. Before we move on to their guidance for next quarter, what about that huge $5 billion revenue target? Didn't anyone even mention that?
One analyst did bring it up, asked about the timeline. But Cloudflare kept it vague, didn't commit to a specific year, just kept saying they're all about long-term growth and are confident about hitting major scale. Eventually.
Classic non-answer. But smart, right? Why lock themselves into a date when everyone's already questioning their sales game? All right, let's dive into what they're projecting for next quarter.
They're projecting revenue to be between $451 and $452 million for Q4.
So that's like 25% growth year over year if you take the average. It's not bad, but it's definitely slower than what they've been doing, right? And it's definitely not going to get them to that $5 billion target anytime soon.
Nope. And it seemed like the analysts were thinking the same thing. One of them even asked if this Q4 guidance of about 25% growth was the lowest point or if it might actually slow down even more in the next few quarters.
So are they basically saying that they're going to ease up a little bit?
Not really. Their CFO, Thomas Seifert, actually pushed back on that idea. He said that revenue is a lagging indicator for their subscription model. Basically, the sales they're making today aren't going to show up in the revenue numbers for a while.
So it's like planting a seed,
Yep.
right? You have to wait a while to see if it's going to grow.
Exactly. What they're focused on, as Cypher explained, are those leading indicators like how much their sales team can handle and how productive they are. They think those things have already hit their lowest point and are ready to improve. He even pointed to how their revenue is growing a lot in places like Asia and Europe as proof that their plan is working. Those are the regions where they already made those sales changes.
So they're banking on those improvements eventually leading to even more revenue growth in the future. Makes sense. Now let's switch gears a bit. What about their projections for operating income and their tax rate?
They're predicting an operating income between $57 and $58 million, and their tax rate should be around 16%. This shows they're still making a profit, which is always a good thing, especially now when so many tech companies are struggling to just break even.
It's true, not all growth is good growth. It's the profitable kind that matters the most in the end. Now, before we finish up this deep dive, I want to talk about one more thing. How efficient Cloudflare is. They hit a 14.8% operating margin this quarter, which is pretty amazing.
It really is, especially since they're investing so much in new stuff like AI. They seem to be trying to find that perfect balance between growing their business and making sure they're making money, which is always tough for any company, but even more so for tech companies.
All right, so we've talked about a lot, from how they did financially to some of the tough questions analysts threw their way. So as we go into Q4, what's the big question on your mind? What are you most curious about?
For me, it all comes down to whether they can actually do what they say they're going to do. Can they really pull off this whole sales transformation? Will they finally close those deals that got pushed back? And will all those new sales strategies actually lead to even more revenue growth? Those are the things I'm going to be looking for in their next earnings call.
That's the big question, isn't it? If they can execute their plan, they've got a real shot at reaching that crazy $5 billion goal.
You got it. And if they can't, well, then we'll have a whole bunch of new questions about whether they can grow in the long term. So keep an eye out, everyone. The next quarter should be really interesting.
Okay, so we've gone through the financials and looked at what analysts are saying. And it seems like Cloudflare is at a bit of a turning point, wouldn't you say? They've got these big plans for growth. They're changing up how they sell things, and they're going all in on new technologies like AI.
Yeah, it's a lot to handle, for sure. And investors are watching their every move to see if they can succeed. One thing that really stood out to me in this call was their emphasis on the long game. They don't seem to be freaking out over short-term market ups and downs. Instead, it seems like they're really trying to build something that will last, even if there are a few hiccups along the way.
Like that pool of funds approach we talked about.
Yeah.
Where they get upfront payments for services. It might cause some initial dips in their revenue, but if it leads to stronger customer relationships and growth down the line, well, it could be really smart.
Exactly. It's all about getting those customers locked in, making their platform indispensable. The idea is that once customers are deeply integrated with Cloudflare, they're less likely to jump ship, even if a competitor tries to undercut them on price.
They're building a moat around their business, making it harder for others to attack. And that moat seemed to be getting even wider with their push into AI. Landing that $7 million deal with that AI company really says something about how seriously they're taking that market.
Oh, absolutely. And it's not just about the money involved in that deal. It's about the bigger picture. Cloudflare wants to be the platform of choice for running AI applications, particularly for what they call inference workloads.
Inference workloads. Remind us what those are again.
It's basically when AI models are actually being used to do stuff like analyzing information, creating content, or powering those interactive experiences we see more and more of.
Ah, right. And their network, which spans the whole globe, gives them a real edge there. They can run those AI models closer to users, which is super important for speed and responsiveness. Think about things like instant language translation or getting personalized recommendations. Those things need to be lightning fast, and Cloudflare can make that happen.
Exactly. They're taking what they're already great at, which is delivering content quickly and securely, and applying it to this whole new world of AI. It's a clever strategy, and it could really fuel their growth in the next few years.
It's like they're taking all the knowledge they've gained about building and managing a global network and using it to power the next wave of internet applications. It's really exciting to think about. But as we've discussed, there are some hurdles. Their sales changes are still underway, and the overall economic climate is a bit uncertain.
Oh, for sure. And we can't forget about the competition. The cloud computing market is packed, and Cloudflare is going up against some really big players. To stay ahead, they'll have to keep innovating and making themselves stand out.
So for our listeners who are keeping tabs on Cloudflare, what's the one key takeaway you want them to remember from all of this?
I'd say this. Cloudflare is changing, transforming. It's moving beyond just being a content delivery network and becoming a platform that impacts almost every part of our online lives. They're making bold moves, facing tough challenges, and shooting for some ambitious targets. Whether they'll reach those goals is still up in the air, but it's going to be an interesting journey to watch.
And I said it better myself. And that wraps up our deep dive into Cloudflare's Q3 2024 earnings call. Thanks for joining us, and be sure to tune in for more insights into the ever-changing world of tech and business.